How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing an overall market update, taking a look at the Dow Jones, the S&P 500, and the NASDAQ. We're also going to be doing a trading update, talking about what I personally did today in the stock market, as well as some stocks and ETFs that I'm watching and looking to trade right now as we're heading into the month of February here in 2020. And I'm sure most of you guys, if not all of you guys, saw the abysmal performance of the stock market today. And if you guys are watching this in the future, the performance of the stock market on the 31st of January, which is Friday. Today, the markets were horrible. So I kind of want to go over my plans regarding whether or not I'm looking to sell out here and maybe try and buy when the market bottoms out, or whether or not I'm looking to just stick it through here and maybe add some more money towards maybe when the market is bottoming out. And the truth is, guys, I've been getting that question a lot. So I want to just go over that, as well as just go over a bunch of individual stocks to see, during this sell-off, which sectors, which stocks are holding up and which stocks are kind of slipping and losing a lot of their value. So before we get into all these different topics, excuse me, guys, all I ask from you is if you enjoy this video, like always, simply go down below for me and hit that like button, and also consider subscribing to the channel if you haven't done so already. And if you want 2 free stocks from Webull valued up to $1,400, I actually have an affiliate link down below where if you use that link, punch in $100, you get those 2 free stocks valued up to $1,400, which is free money at the end of the day, guys. And again, that is linked down below in the description box. And without further ado, let's just talk about the absolute bloodbath, the carnage of the stock market, which was today, guys. The S&P down $58.14 at the close, down 1.77%. And this is mostly because, if not all, because of the coronavirus. The coronavirus has been pushing a lot of fear in the markets, a lot of uncertainty, right? And at the end of the day, what does the market hate? It hates fear. It hates uncertainty. So this is getting really bad, guys. The infected people, the numbers going up every single day. The amount of people killed are going up every single day, or the amount of the number is going up. That is, have to make sure my grammar is correct here, guys. And it's not good. 213 people were killed or have been killed so far from the last update that I've personally seen. And the last statistic I've also seen was the rate is going up 20 to 25 to 30% every single day, and the rate being the amount of people being infected and the amount of deaths. The percentage is just crazy. Day after day after day, more and more and more people are getting infected. And again, this is why we've been seeing the pressure on the stock market. And if you guys have been following the channel, I've been saying for a couple weeks here, a little 3-5% sell-off, maybe down to the 180 SMA here on the 4-hour chart. This would be very, very healthy for the stock market, and it seems like my wish has come true, and that's exactly what we're starting to see here. We topped at about 33, 37. Of course, I didn't know when the sell-off was going to come. I just knew the markets needed a sell-off, right? So from that 33, 37 all-time high to where we are now, believe it or not, guys, we've sold off a nice 3 to 3.5% already, and down to that 180 SMA, which I think there's a pretty strong likelihood, at least on a technical basis, that we hold this. That could be another 1.5% to the downside. So if we do hold that 180 SMA, I truly think this could be an awesome opportunity to maybe buy this the dip in the markets. And again, that would be a total 5% sell-off here, at least in the S&P 500. And sure, if the coronavirus gets a lot worse, if they don't contain it within these next couple of weeks, if there's no sort of cure, I don't know how this might affect the markets. We talked about yesterday, the different businesses that are being affected here real time. This could have a longer term effect on these businesses. Maybe not a long term effect, but in the short term, it's going to have an effect on them and their Q1 earnings. Maybe if, again, it doesn't get contained here in a timely fashion. But I believe, again, this is just me speculating. I think over time it's going to get contained, whether that's in the next couple of weeks, maybe in a month or two. Sure, it might hurt some profits, hurt some revenue numbers of the businesses, but overall, the businesses affected, that is. But overall, I think the markets should be fine here if we're looking at a 3 to 6 month basis point. And of course, I showed a chart a couple days ago, and you guys probably saw it, that every single time after a huge disease virus breakout, the markets have recovered and done well. So based on that chart, and you guys can probably look this up yourselves, it's pretty stupid to just panic sell out of these markets, and I'll talk about that more here in a couple of minutes. So the NASDAQ today, you guys can see the futures are down 203 points, down 2.2%, which is insane. I believe the NASDAQ actually closed down about 1.5%, so that indicates that it's falling even more after hours here, which is not too good, right? And the NASDAQ is right on top of that 180 SMA right now on the 4-hour chart, which on a broader basis here, technical basis that is the level that I'm looking for the NASDAQ to hold. If it breaks, this thing could be selling off maybe back to 8,900, maybe down to about 8,830. Of course, we're going to have to watch these levels, and I'll cover them for you here on this channel. So going over to the Dow Jones Industrial Average, down 603 points, down 2.09% today, and this, just like the NASDAQ, not quite like the S&P. The S&P still has some more room to drop, but the Dow Jones is right on top of its 4-hour 180 SMA, and that old resistance being at around 28,200 as a new support. So I'm very interested here, guys, in seeing if we hold this next week. This is kind of why I didn't do too much buying today, which you'll see in a couple of minutes here when I talk about my trades, because I want to see in this upcoming week what ends up happening at this level, and of course if the S&P decides to maybe sell off even more. So that's kind of why I was a bit cautious today in terms of deploying my cash. And if you guys have been following the channel, you know that I have been heavier cash these past couple of days due to this. Not that I'm saying I saw it coming, but I kind of did see it coming, to be honest, guys. So I guess I am saying that. And this is kind of what happens when you have these global outbreaks, and we had all of these back and forth between the U.S. and China regarding the trade war. It was very similar volatility like this, and these are just the best times to keep some cash on the side. And really, we'll talk about that here in a couple of minutes, but yeah, let's get into that. But before we do, let me know in the comments, what are your thoughts on the markets right now? Are you buying this dip quite yet, or are you giving it some more time to just kind of wiggle out? So let me know down below in the comments, what are your thoughts on that? Now, let's talk about what I personally did today. And if I think, from my personal opinion, again, this is just my opinion, don't take it as the thing for you to do, but I want to give you all my opinion on whether or not I think it's wise to sell out, take a loss in your stocks here, and wait until the bottom and then buy back in. So for me, guys, today, what I did, I traded TVIX, and you guys in the Discord group chat, which is 100% free of charge and linked down below, you guys know that I traded TVIX today, and I'm sure many of you all out there traded TVIX as well. So TVIX is what I usually trade whenever the markets are showing some volatility, whenever the markets are kind of rocky, and there's a potential for them to fall, right? At risk of falling. That's what I wanted to say there. And this was up today 21%. And if you guys don't know, TVIX, it kind of trades based off of the VIX, right? And the VIX is known as the fear index, and it also tracks volatility out there in the stock market. And again, the market's dropped a lot today. There was a lot of volatility, hence why the VIX was up a ton. $3.35 to be exact, up 21.63%. So TVIX today, guys, although I didn't make as much as I could have, I still made a pretty nice amount here, hedging against some of my swing positions that many of you guys might be asking yourselves, did stocks cut out of his swing positions? The truth is no, and I'll go over that here in a couple minutes, but I didn't cut out because I hedged with some TVIX, right? And TVIX today, guys, it went from $48 all the way up to nearly $60. So did I catch that whole move? Absolutely not. If I did, that would have been fantastic. I would have made a nice 20%. But no, I did not catch that whole move. To be honest, I started buying in around $51.80. I actually bought a little bit more at around, I think it was like $52.12. And it ran up so quick, guys, that at this point in time, of course, I didn't know it was going to go to 60 because I didn't know what was going to happen. But at this point in time, it was going pretty quickly, so I didn't really scale out the position as quickly as I wanted to. And honestly, guys, I ended up just taking a profit, just taking the whole profit at around, I think it was a little under $54. So I held through this little sell-off. Again, did not add more, kind of had the position I wanted built out. Could have added more money, but I didn't know it was going to go up to 60, so didn't really want to risk it there. Just wanted to have a little bit to hedge, and ended up holding through the sell-off again and selling. I think it was close to about 53.85-ish, right around there. Again, just a little bit under $54. So from $52, let's say I got in, up to about $53.80. I made a nice 3.5% on that little day trade there. And again, it's nothing compared to the 20% that it went up on the day, but I'm happy with it because, again, I'm looking to hedge some of my positions, and you really have to learn how to make money whenever the markets are going up and whenever the markets are going down because, believe it or not, guys, to be honest, there's a lot, arguably more money to be made when the markets are going down, especially if you know how to short stocks. I don't really short stocks, I trade, again, TVIX, some of these market ETFs that go up whenever the markets are going down, to kind of short stocks and hedge against my long-term positions. But from the, the traditional sense, I haven't really shorted stocks too often. I don't do it too often, but if you learn how to do that, there's a lot of money to be made, especially if you're good at it and you just put the time in and learned the skill, right? So that's kind of what I did. I'm holding on to Netflix still. And believe it or not, guys, Netflix held up quite well today. This is one of the stocks that held up very well, and it's right by my cost basis. So I figured, why not just hold on to my shares? I'm in with a very small position. Again, cash on the sidelines because this could be one that I might want to add money into if it were to sell off due to this short-term sell-off that we're seeing, right, in the overall markets. And that kind of answers the question of, do I want to sell my stocks and then buy back at the bottom? The truth is, no, guys, because timing the market in the short term, it's impossible, right? It's impossible in the short term, and in the long term, all we can do is really use educated bets here. And for me, trying to sell out and hopefully catch Netflix at a lower price, it's kind of dumb, right? I'd rather just be in the stock with maybe a 20% goal position, which is kind of what I'm in right now, and then have a lot of cash, which I do, like I've been mentioning in these videos, on the sidelines. So let's say the markets were to sell off another 2%, Netflix takes a hit, although it didn't take too much of a hit today, but let's say it did take a hit down to maybe $3.30. The trend will still be intact, so I'm not fighting the trend, and I could end up buying more shares at around 330, bringing that cost down, and this can be a nice swing entry, right, to really average down on a stock that's still uptrending, because to be honest, I'm looking to hold Netflix a little bit longer. It's not like a 2-year swing trade or something like that, but I'm looking for it to be a nice month, 2-month, maybe even 3-month swing trade, so I'm cool holding through some of this volatility. Same exact thing with Facebook, guys. I added some yesterday at about $207 pre-market, and with today's session, I'm down a little bit on those shares, but the truth is, I'm comfortable holding because I'm looking to add more money into this thing. Maybe at $200, maybe about $195 if it did get that ugly. You know, $195 is the 180 SMA support on this daily chart. So that could be another opportunity to add shares. And Facebook, the mentality I have with it is a longer term swing trade, 2 months, 3 months. So I'm looking to add here. Anything under 200 is gravy. 195, 200. To be honest, I don't know if it's going to get there, but I'll add shares there because ultimately I think it has a great potential. Again, nobody knows what can happen in the short term, but I think it has a great potential. I'm willing to make this educated bet that, you know, it could go back up to 220, 225 just based on the value of Facebook. I think there's a good likelihood that that happens, and I'm sure many of you guys out there in the community, you can agree with that. So overall, that's kind of what I'm doing and my thoughts on whether or not you should sell, time the market. It's pretty silly, guys. You know, if you're into a swing trade, if you're in a swing trade of a stock that you really believe in, scale in a little bit. Keep some dry powder on the sidelines. That's what I personally do, and that's kind of my opinion here. You don't have to do that. This video is for entertainment purposes only. You can do whatever you want, but that's just my opinion. That's kind of what I do, and it's really worked for me in the past, to be quite honest with you guys, which is why I share it here on the channel. I'm not sharing with you guys things that that'll lose you money at the end of the day. These are things that have worked for me and that I've made money doing. So that's kind of it for the trading update. Let me know down below in the comments, what did you guys do today in the markets? I'd love to know. Are you selling, trying to time the market, buy back in when it quote unquote bottoms out? Are you doing what I'm doing, maybe buying some shares but keeping a lot of cash on the sidelines to buy maybe at lower prices? I'd love to know down below in the comments your thoughts. So now let's just run through a lot of stocks, guys. Not going to do too much in-depth technical analysis in this video, because I just want to get a bunch of names out here so we can see kind of what happened today, what did bad, what did well. And let's just get to it. So Amazon was the only one that really did well today. It closed at $2,008 per share. It ended up going up 7.38%, up $138. And this is mostly because, well, solely because I'd say their earnings yesterday were pretty solid. So Amazon ended up crushing it today. On the flip side, Apple did not do too well today. Excuse me, guys, down 4.43%, down $14.36 here. Apple is now trading at $309. And honestly, this is something that I've been waiting for on Apple. If Apple ends up pulling down to maybe $300, maybe holding that 180 SMA, this could be an entry point on Apple here, guys. Honestly, although I'm not too hot on the valuation. Maybe it's obviously not undervalued. No one's going to argue that. But either way, although it's still maybe fair valued, a little overvalued, I still think in the short term, you know, if the markets do clear up, the momentum for Apple to the upside will most likely continue. Again, that's just my opinion, right? So today, Facebook, we already talked about it, down 3.6%. Google down 1.5%. They're actually reporting earnings on the 3rd of February, so watch them for this upcoming week. I'm assuming that's Monday, so watch out for Google this upcoming Monday. Microsoft is another one that I'm definitely watching for a potential entry point. This one was down 1.48%. Now, let's talk about some stocks, guys, that got killed. Like, not too bad, but they got killed pretty bad. So NEO down 7.35%, and you'll notice that a lot of these stocks are unprofitable. They're a bit more skeptical. They're not blue chip companies, and that's kind of what happens out here in the stock market, right? We have a red day. A lot of the time, the Coca-Colas of the world, Procter & Gamble, some utility stocks like this, they don't get crushed that bad. If not, and sometimes they don't get crushed at all. They go up sometimes. But speculative stocks that lose, or companies rather, that lose money, they go down a lot of the time. So NEO down 7.3%. Another one is Beyond Meat, down 5.86%. Some Chinese names here, some new companies, Luckin Coffee, LK. This IPO'd, I think, a year ago, something like that. Down 10.7% today. So a lot of these IPO speculative names, they get crushed on days like this. Let's just take a look at some random ones now off the top of my head. Maybe Lyft. Let's take a look at Lyft. Lyft today, oh wow, not down at all, really. Down 0.65%. So that's kind of surprising there. Let's see Roku. Roku's one that's high flying. Roku's down 7%. Another great example. These stocks, they kill it on green days, but on red days, they get crushed a lot of the time, right? So some stocks that didn't get crushed are utilities, right? And utilities have been doing quite well because a lot of people view these as more defensive investments. You can take a look at Duke Energy, which, believe it or not, guys, and you'll see this in my M1 Finance portfolio update video coming in the month of February, I started buying Duke, no joke, at around $91. I actually sold out of my Alibaba position when Baba was at $230. Took the proceeds, and I ended up buying Duke, and the timing on that was absolutely incredible because Duke has gone from 92 up to about 98 since I did end up buying, and they are reporting earnings here on the 13th. So they were actually up 16 cents today, up 0.16%. Southern Company, another utility here, it was down 0.6%, but it's up from $63 all the way to $71 since the beginning of January. And again, this is viewed as a defensive investment, does well, obviously when there's a lot of turmoil in the market, as there is right now. Let's take a look at some other ones. Coca-Cola down 46 cents, nothing crazy. Procter & Gamble, down 1%, nothing crazy there compared to some of the other ones. Johnson & Johnson down about 1%. Altria today down about 1%, although they got squashed yesterday due to their earnings. That's a whole nother topic for a whole nother video, but you guys kind of get the point, right? The safer stocks, they don't get hit as hard, which is why it's arguably a good idea to have some money in growth stocks, have some money in speculative stocks. I think a very small amount of money in speculative stocks, and have a nice amount of your portfolio in blue chip companies that stand their ground whenever the markets get rocky and that pay dividends. Because think about it, guys, if you're all in growth stocks, which believe me, that's not a bad thing, but let's say hypothetically you're all in growth stocks and the markets take a hit for 3, 6, 9 months, your portfolio is not going to be generating any cash flow, right? Unless you're putting money in it through deposits, which is not cash flow generated from the portfolio, but, it's not going to be generating money that you can reinvest it unless you put money in it yourself. And, typically when the stock market sells off aggressively, what gets hit harder, guys? Let me ask you this: growth stocks or blue chip, value stocks like a Johnson & Johnson, Coca-Cola, Procter & Gamble, whatever it may be? Well, the truth is the growth stocks get hit harder. value stocks, whatever you want to call them, blue chip, dividend king, aristocrats, whatever you want to call them, they typically do better, which is why in my portfolios, long-term portfolios, I love having growth names like Facebook, Amazon, Google, these tech names, maybe even some chip companies. I love having those names in there to bring that growth. I'm a younger guy, but I also love having names that really I know I can sleep holding, and I can sleep at night and know in 10 plus years I'm going to have more money in my brokerage. And some of those are, Johnson & Johnson. I know I've mentioned that one a lot, but Johnson & Johnson, even Altria, although a lot of people think this is speculative, I love the cash flow Altria provides. And it's not speculative, but it's a bit more kind of risky right now with everything going on with e-cigarettes, but these are just some names, right? Altria, Johnson & Johnson, Procter & Gamble, the Duke Energies of the world, REITs, have some REITs, Realty Income, ticker symbol O, is one that pays every single month. I love this one. SPHD, this is another one that I own that pays every single month, and that quite honestly I'm going to be buying some more of now since it is dipping down. And this is an ETF that tracks lower volatility stocks. So yeah, guys, that's kind of it, my little rant there on just having a little bit of diversification, because at the end of the day, it helps you when you're dealing with a market like this where the markets are getting crushed. And just imagine having all of your names in growth, or all of your stocks in growth names right now. Your portfolio probably got hit harder than somebody that had a more balanced class of assets, right? So overall, that's kind of it for today's video. If you enjoyed it, let me know down below in the comments what your thoughts are. Let me know what stocks you're trading, your thoughts on long-term buying here, and leave a like for me, guys. And also subscribe to the channel if you want to see further content from me. And don't forget to claim your 2 free stocks. 2 free stocks from Webull valued up to $1,400 with a deposit of $100 into the account. And that affiliate link is linked down below in the description box, and it helps me really put out all this free content for you guys. It's a way to pay me back for the free content that I'm putting up here on YouTube. So I'll catch you all in the next video. Thanks again for watching. As always, I appreciate your support every single day. It means a lot to me. Peace out.